Hi guys, welcome back to another Q2 FY26 earnings result update. In today's video, we are diving into Jeena Sikho Lifecare Ltd, a company that continues to impress with its growth, expansion and execution. Let's find out how the numbers look this quarter and whether they're on track to hit their full year guidance. Before we get into the results, a quick refresher. Jeena Sikho operates with two main segments. First, the sale of services, which includes their clinics, daycare centers and hospitals, and second, the sale of products, mainly their Ayurvedic medicines under the Jeena Sikho brand, tablets, capsules and powders that address lifestyle related diseases. At the start of fiscal year 26, management gave three clear targets. One, hit revenue of about 720 crores. Two, expand hospital capacity by 50% from around 2000 beds to 3000, and three, maintain a PAT margin between 20 to 25%. So how are they doing so far? Let's take a look. For quarter 2 fiscal year 26, Jeena Sikho reported outstanding results again. Sales grew 63% year on year and profit after tax shot up by a massive 121%. PAT margin jumped from 23% last year to 31% this quarter, an impressive leap. However, management says investors should continue to model margins between 20 and 25% as that's the sustainable level. At the halfway mark of fiscal year 26, Jeena Sikho has already clocked 350 crore rupees in revenue and 110 crore rupees in profit. That's almost halfway to their full year goal, showing they're right on track. Now coming to the product segment, their Ayurvedic medicines. Last year, many products were still under R&D or regulatory approval, but this year the rollout has picked up speed. The company has expanded distribution across Uttar Pradesh, Maharashtra, Gujarat and Delhi, and is now in advanced talks with a major pharmacy chain that has over 1 lakh outlets across India. If this deal materializes, Jeena Sikho's products could gain nationwide visibility, fueling even stronger growth. Next, the hospital segment is the backbone of Jeena Sikho's business. They're targeting 3000 beds by year end, and as of quarter 2, 2200 beds are already operational with another 400 in the pipeline. What's even more impressive, this 50% expansion is being fully funded through internal accruals. No debt, no equity dilution. That's solid financial discipline. Occupancy stood at about 57% in Q1, and the goal is to push it up to around 80% by year end. Management has made it clear by told us the focus is now on improving utilization, not just adding capacity. They're also exploring 50 franchise centers and introducing VIP hospitals that provide premium facilities while remaining profitable. Instead of building hospitals from scratch, Jeena Sikho is intending to acquire existing hospitals and medical college setups to reduce capex. However, converting medical colleges into hospitals has been slower due to regulatory delays, so they may now focus on quicker acquisitions or new builds where execution is faster. Now, a question investors often ask: why did Jeena Sikho stop taking government patients even after Ayurvedic treatments were added to schemes like CGHS and ECHS? The reason is simple: payment delays. Cash patients pay instantly, insurance payments take 3 to 6 months, but government payments take 9 to 12 months. That created huge receivable cycles, so the company has now stopped taking such patients until payment timelines improve. A key update this quarter is the collaboration with Chandan Healthcare, a diagnostic company with around 40 centers. The plan is simple: wherever a Jeena Sikho hospital exists, Chandan will set up a diagnostic lab nearby. This gives Chandan strong volume growth and gives Jeena Sikho full service hospitals a win-win partnership. So to wrap up, Jeena Sikho continues to walk the talk. They're well on track to hit their 720 crore rupees target, expand to 3000 beds and maintain healthy 25% margins, all without external funding. Execution remains their biggest strength, and under Acharya Manish Grover's leadership, the company's story just keeps getting better. Thanks for watching this earnings breakdown. Don't forget to like, share and subscribe for more updates from Markora Analytics.